Greetings, children. Today we'll be talking about Chapter 1 Introduction to Accounting. The contents covered in this video are the meaning of accounting, which has already been discussed in the previous video, characteristics or attributes of accounting, objectives, functions, advantages, and limitations of accounting. All these topics are quite linked with each other. That is why I have included all these topics in one video. Let's talk about the first topic, that is meaning of accounting. As we have already discussed that accounting is a secondary function. Which is the primary function? Bookkeeping is the primary function and it is a part of accounting. So accounting is a secondary function and it starts where bookkeeping ends. It involves summarization of the classified transactions, analysis and interpretation, and communicating the end results to the users. So basically, accounting involves all the activities that are involved in bookkeeping, such as identification, measurement, recording, and classifying. And it also includes summarization, analysis and interpretation, and communicating. The definition given by American Institute of Certified Public Accountants is: accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money the transactions and events which are in part at least of financial character and interpreting the results thereof. Let's talk about the attributes or characteristics of accounting. The first characteristic of accounting is identification of financial transactions and events. Now in accounting, we need to identify those transactions and events that are part of an economic activity. So only those transactions that can be measured in terms of money are recorded in accounting. For example, if we purchase raw material or if we make sale of any finished product, such kind of transaction has a proper evidence and can be expressed in monetary terms. So these transactions which have a bearing on the business and which can be expressed in monetary terms are identified and then recorded in accounting. The next characteristic is measuring the identified transactions. So once the transactions are identified, the transactions which can be expressed in terms of money, only those transactions will be eligible to be recorded in the books of accounts. An event which cannot be measured in terms of money is not recorded in the books of account. For example, an event like quality of management team or appointment of a new manager. These are qualitative transactions and cannot be expressed in monetary terms, hence they would not be recorded. The next characteristic is recording. Accounting, as we already know from the definition, is the art of recording the business transactions in the books of accounts. While recording a transaction in the books of accounts, the first and the foremost book, that is the book of original entry, is known as journal, where every transaction is recorded. This book is further divided into various subsidiary books such as cash book, purchase book, sales return book, etc. So recording means that the transaction which has been identified and can be measurable should find a place in the books of accounts. The first and foremost book where transactions are recorded is known as journal and subsidiary books. The next characteristic is classifying. Now, classifying is an activity through which we group the similar transactions of the same nature and we put them at one place. The transactions, as I already told you in the previous attribute, that the transactions are recorded in the journal or subsidiary books. Now these transactions, since they are mentioned in these respective books separately, they need to be classified on a certain basis and they need to be shown at one particular place under one heading. So classifying basically means grouping the similar transactions together in order to get a comprehensive view of the transactions. For example, goods purchased from Rahul throughout the year would be mentioned in purchases account also and in Rahul's account also. So all the purchases made throughout the year can be found in one particular account under one head, that is purchases account. The next characteristic is summarizing. Summarizing means that whatever information has been recorded and classified, now that information is presented in such a manner that it is understandable by the users, both the users, the internal as well as the external users, and such information can be used for ascertaining the profit or loss for the concern. The next characteristic is analysis and interpretation. Now, accounting does not stop at ascertaining the profit or loss or the financial position. Such accounting information must be analyzed further and interpretations should be drawn from the accounting information so that remedial measures can be taken in future. So basically, analysis and interpretation means that the profitability and the financial position of a business concern is compared with the previous years or with the industry standards to find out any kind of deviations, and it also helps in planning for the future. The next characteristic is communicating. Finally, the accounting information that has been recorded, classified, summarized, analyzed, that information must be passed on to those users who are in need of that information. Now, there are various users who are interested in accounting information such as the government, the taxation authorities, the management, the employees, the workers, etc. So this was all about the characteristics of accounting. Let us now have a look at the objectives of accounting. Now, objectives of accounting include systematic recording of business transactions, ascertainment of results, ascertainment of financial position, communicating information to various users. Systematic recording is done through bookkeeping by recording the transactions in journal, ledger, and trial balance. Ascertainment of results, that is the profit or loss, is ascertained by preparing the trading and profit and loss account. The financial position is ascertained by preparing the balance sheet. And the information is communicated to the users with the help of financial reports. Now, the various objectives of accounting, if we spell them out differently, they are maintaining the systematic accounting records, determining the profit or loss. The profit or loss can be ascertained by preparing trading and profit and loss account. Determining the financial position of the business. The financial position can be ascertained by preparing the balance sheet. The balance sheet shows us the status of our assets as well as of our liabilities. So it tells us about our financial position. The next objective is that it facilitates the management. The management often requires a lot of financial information in order to make effective decisions and to control and to do budgeting, etc. So such information which is provided through accounting helps the management in discharging their functions in a more effective manner. The next objective is providing accounting information to users. As I have already explained, accounting information must be passed on to the users. So objective of accounting, why do we do accounting? Because such information is required by certain users such as government, public, consumers, employees, etc. The next feature is protecting the business assets. Now, another objective of accounting is to have records of the assets which are owned by the business. Assets means anything of value that the business has. So, accounting records all the assets that a business has. It maintains the record of the various assets owned by the business and which enables the management to protect them and to exercise control over them. So why do we do accounting? We do accounting so that our records are maintained, so that we know about our profit and loss, so that we know about our financial position, so that it helps in decision making by the management, so that information is provided to users, and so that our record of our assets is made. Let's move on to the next topic, that is functions of accounting. Now, you will notice when I'll talk about the functions of accounting, there will be a lot of points will be repeated because of the reason that the characteristics of accounting, the objectives of accounting, they will be incorporated in the functions of accounting. If you notice, the first function of accounting is maintaining systematic accounting records. So the primary function of accounting is to have proper records of each and every transaction and event that happens in the business. So the accounting records, obviously, which are made following the accounting principles, rules, and concepts, they must have a proper record of all the transactions and events. The second function of accounting is that the financial statements involve the preparation of trading account, profit and loss account, and the balance sheet. So the function of accounting is to help in the preparation of these financial statements so that the profit or loss can be ascertained and the financial position can be known. The next function of accounting is meeting legal requirements. Now these accounting records, they are a valid proof of evidence in the court of law. If they are made systematically, then it can be presented in the court of law in case the firm faces any kind of problem. Every act, every law requires the submission of returns in the form and period as is prescribed in a particular law. So in order to meet the legal requirements of certain acts and in order to have a documentary evidence, accounting is required. The next function is communicating financial information. So another aspect of accounting is to provide such financial accounting information to its various users. The next function is assistance to management. So management, again, as I've already told you, requires certain financial information which is given by accounting records, and in turn it helps the management in decision making. So the various decisions can be made, the assets can be treated in a best possible manner, the expenses can be planned in the best possible manner when we do proper accounting, when we maintain systematic accounting records. So these were the functions of accounting, that what accounting does. It maintains records, it prepares financial statements, it meets the legal requirements by the government and the acts, it communicates the information, and it helps the management in decision making. The next topic is advantages of accounting. Now again, you will see that a lot of points would be repeated in advantages also. Now, the first advantage is financial information about business. Obviously, the financial information about business is represented through the systematic records that are maintained in the books of accounts. So, if the business wants to know about the profit or loss, that can be found out by accounting. Assistance to management, as I already told you, it helps the management in making various decisions and taking care of various expenses. Replaces memory. This is different. Now replaces memory. Now it is not possible for a human being to remember each and every transaction. It is not possible to manually do all the calculations in head. So accounting helps in replacing the memory because it is a systematic record of every transaction and event. The next advantage is facilitates comparative study. Now, accounting helps in facilitating comparative study. Comparative study means where we are comparing accounting information of 2 or more years, or where we are comparing the accounting information with the industry standards. So, facilitates comparative study means that it helps in making comparisons with the industry standards or with the performance in the previous years. Next, facilitates settlement of tax liabilities. Now, a systematic accounting record, it helps in settlement of income tax and GST liabilities, since it is a good evidence of the correctness of the transactions. So since it provides evidence for the correctness of transactions, it also helps in settlement of the various tax liabilities to the government. The next advantage is facilitates loans. Now, the banks, they do not grant loans just like that. Obviously, the banks and the financial institutions, they grant loans to the business on the basis of their financial statements, on the basis of their growth potential. So, accounting, if done in a systematic manner, it provides such information to the banks and financial institutions, and loans can be given to the business on the basis of this. The next advantage is evidence in the court of law. Now, since systematic records are maintained, everything is a documentary evidence, so it can also be presented in the court of law. Facilitates sale of business. Now, if at all somebody wants to sell his business, then the accounts maintained by him will enable him to ascertain the proper purchase price. So the purchase price cannot be ascertained until and unless proper accounting is done. The next advantage is assistance in the event of insolvency. Now, insolvency means when a person becomes insolvent, it means he is unable to pay his debts to other people. Means if he has taken money from some people, he is unable to pay back that money to those people. So, insolvency proceedings involve explaining many transactions that have taken place in the past. So, if a business becomes insolvent, if a person becomes insolvent, he has to explain each and every transaction that happened in the past to the government. Now, systematic accounting records, if made, would help him to deal with such situations. Helpful in partnership accounts. Now, if proper partnership means when two or more people, they agree to join a business and conduct the business and share the profits of the business. So accounting is helpful in partnership accounts because since two or more people are involved, so if proper accounts are maintained, there will be no miscommunication, there will be no misconduct, misunderstanding between the partners, and the accounts can be settled properly. The last advantage is helpful in decision making. Now, as I've already told you that proper accounting helps the management in decision making. Various decisions have to be taken regarding the assets that are owned by the business, regarding the expenses of the business, regarding the liabilities of the business. So, budgeting for the future, forecasting for the future. So, all these decisions by the management can be taken in an effective manner with the help of accounting. So these were all the advantages of accounting. If you notice, there are so many advantages of accounting because accounting in every field gives a lot of benefit. Moving on to the last topic, that is limitations of accounting. Now, the first limitation of accounting is accounting is not fully exact. In spite of the fact that most of the transactions are recorded on the basis of evidence, yet there are certain estimates which are made for ascertaining the profit or loss. Now, what are those estimates? For example, relating to the assets, we estimate the useful life of an asset. For calculating depreciation on the assets, its useful life is estimated, that for how many years the asset will be useful for us. Now that is purely an estimate and that is not an exact figure. So that is why we say that accounting is not fully exact. The next limitation is unrealistic information. Now, accounting information may sometimes be unrealistic since the accounting statements are prepared following accounting concepts and conventions. For example, there is a concept called going concern concept. It is taken under this concept that business will continue for a foreseeable future. Accordingly, the assets are recorded at cost and depreciated over their useful life. Now, the assets may not actually be realizable at the book value. So again, following the going concern means that the assets and the business will continue for a long period of time. Still, we record the assets at the cost value and we depreciate them over the useful life. So that is a very unrealistic information that is recorded in the books of accounts. Next limitation is it ignores the qualitative elements. Now, since in accounting only the items or only the transactions which can be expressed in monetary terms are recorded, therefore the qualitative transactions are ignored. The qualitative transactions may be the quality of management, the skills of the management, industrial relations or public relations. So all these qualitative aspects which have a bearing on business are not recorded in accounting. It ignores the effect of price level changes. Since in accounting we follow the money measurement principle that everything that is expressed in terms of money is recorded. However, the value of money does not remain stable in throughout the years. So accounting, however, presumes that the value of money remains stable. Unless price level changes are considered, accounting information will not show correct financial results. Now, since accounting statements are prepared at historical cost means that the cost at which an asset is purchased, at that particular cost, the asset is recorded in the books of accounts. So, since it follows the historical cost, it does not take into consideration the price level changes, and therefore the results are not very accurate. The next limitation of accounting is window dressing. Now, accounting may lead to window dressing. The term window dressing means that the manipulation of accounts is known as window dressing, where the businesses they try to conceal some vital facts and they present the financial statements to show a better position than what actually is. If you look at this picture, you can see a showroom and the window. So if you go to the market and you see the show window, everything looks very attractive and everything looks very beautiful. But it may be a possibility that when you go inside the same shop, you may not like anything and you may not find things as beautiful as they were shown in the show window. Since the best of everything is shown in the show window by the shopkeepers, similarly in accounting also, by window dressing, the accountants they show a very beautiful picture of their accounts, irrespective of the fact that picture may not exist. So this is one of the limitations of accounting. Let's recapitulate. In this video, we have talked about the meaning of accounting, characteristics of accounting, objectives and functions of accounting, advantages and limitations of accounting. Thank you so much for listening to me so patiently. If you really liked my video, then please show some love and support and like my video, subscribe to my channel and share it as much as possible. Doing this will motivate me to upload more content. Thank you so much.